What's good, everybody? Happy Wednesday already. Let me just shut my phone off here in case something goes on there. We are good to go. Hey, how's everybody doing today? This is our market update for those of you that are clients of Jazz Wealth. If you're not a client of Jazz Wealth, check us out, jazzwealth.com. Did I say Jazz Wealth enough times? Maybe I'll say it a few more by the time we're done, but if you need help with retirement investments, you have an old 401k, this seems to be 401k rollover season when many people start realizing, hey, I got this old 401k over here. It's not doing anything. I can't contribute to it, and I don't even know what's going on in there. If you need help with that, of course, we're here for you. Let us know. jazzwealth.com. You can even schedule a call or just send me a quick message if that's better for you. No problem. Let's talk about the markets here because earnings are the big focus and continue to be the big focus. We've got a lot going on here. We have, I'm going to bust over to the charts in just a second, but we have so far 3/4 of the companies that have reported, we're nowhere near finished with earnings season, but 3/4 of the companies that have reported earnings have done better than expected. That is very important because Wall Street has set the bar so high it's off the screen, you can't see it. They are thinking this is going to be a near record, well, an absolute record earnings season. So they're thinking 16.8, no, that's not the right number. 18.6% growth is what they're looking for in profits for the S&P. And so far, not too bad, right? If you follow earnings closely, okay, that's a pretty high bar, but we do have a chance of getting there. So if we do get there, that would be the most growth in over 7 years. You'll probably see that on the headlines. I would imagine if they do that, that'll make headlines altogether. So you'll be able to check that out. Today, a little bit mixed, right? Let's go over to the charts and take a look at a few things here. We had the Dow, which you now see on the charts. The Dow was down a touch. So by the end of the day, the Dow closed lower, I believe by 20 points, something like that. I didn't write it down. Small down day for the Dow. Most of it, if not all of it, was because of IBM. Let's see where we finished on the day for the Dow, or for IBM. So IBM actually is going to account for almost 90 points pull against the Dow. So although the Dow was down 20 today, let's say the Dow was down 30 for easy math, the pull on IBM was equal to, like if IBM didn't do anything today, the Dow would have been up 60. That's how aggressive this down move here in IBM was. That was an earnings miss. I didn't look into it too much. IBM is kind of a snoozer lately. If you follow that earnings and you're kind of into that stuff, they got a lot of work to do there. Johnson & Johnson was also part of the reason for the pull on the Dow today. That was down 2% on earnings. I believe it was down pretty much instantly from the earnings report. So basically, markets today, you don't see very much, right? The S&P only was up by 2 points. The Nasdaq was higher by 14, I believe, a little bit better going on over there. And a lot of that is because the banks, the tech stocks, the financials, right? They just kind of pulled and tugged and had nothing to do. But you had oil. You had oil up today quite a bit. That made headlines throughout the day. This is now a brand new high for oil. It was up 3.5%. So good news is anything energy related in your retirement investments, which you could see here. Here's one of them. Awesome move here in oil. This is one that just, it's the little engine that could, right? It keeps going. So anything energy related doing well. Commodities, of course, if you're exposed to that, obviously we're still talking a little bit of oil here, but also trading up at the highs, looking pretty good there as well. Sort of shocking, really, but that was helping to pull the S&P higher on the day. Other news, the Federal Reserve came out with their beige book today. They really didn't say anything that anybody wasn't expecting, or the notes didn't have anything that anybody wasn't expecting. They made some really obvious comments, like they expect the prices of steel to go up. Right? Duh. I mean, everybody's been paying attention for a couple weeks. We know the price of steel is going to be going up. They've already admitted, almost every steel maker, that they're going to pass that on, any tariffs onto their customers. So let's go back to the charts, take a look at a few others. What did we have here in Morgan Stanley? You almost could trade this on a daily basis. Bank of America, JP Morgan, Goldman Sachs, not PNC. Did PNC do it too? PNC Bank, all of these stocks, and now Morgan Stanley in the banking sector, they reported earnings, they got sold. Now Morgan Stanley, not too bad. It started higher and got sold off there. There's a couple key things here. Every time a bank reports earnings, investors are selling instead of buying. All the other stocks report good earnings, stocks go higher. For some reason, these banks are reporting good earnings and their stock is headed lower. Now, one of the reasons Morgan Stanley was they reported good earnings, and this is the second thing, is trading profits. These banks are killing it trading your money back and forth, or maybe your money. But the point is, if you go back about a month ago, we were talking about that decline over here, right? When the markets fell apart, Goldman Sachs couldn't keep up with the number of high net worth clients and corporate clients that were buying that dip. While everyone else was panicking, they were buying it. And so all that trading activity really, really added to their bottom lines. Let's move over to the transports today, because if you have any transportation stocks or an exposure to that sector, maybe the ETF or some sort of mutual fund, here is the transportation sector. Great day, up almost 2%. A lot of it due to CSX. That company reported earnings, did really well, and managed to cut a lot of costs along the way. Stock broke out to new highs. That's a move of 8%. Looking really, really good there. I'll go over to, I don't really want to talk about the airlines too much. It's really sad what happened there with Southwest and that flight. But on the bright side, United Airlines reported earnings, record prices. They're able to charge more, higher prices. Consumers are coming to them and paying the higher prices. So because of that, their earnings were actually quite good. 5% gain on the day. It did pull up something like Southwest. You might think, like, when bad things happen like that, if you didn't see the Southwest engine that exploded and killed the lady, you might think that would hurt the stock. Doesn't always. I mean, sad to say, but these things happen. So it doesn't always hurt the stock. Southwest was actually higher today, along with a lot of the other stocks, mostly because really we're talking about the company as a whole. Obviously, it's sad to hear about someone getting injured or hurt or killed, but really investors are focused on the sort of overall growth of the sector and these individual stocks. So all the airlines were basically up today. I think even Spirit Airlines had a good day, 4%. Yep, Alaska Airlines, yeah, they all did great today. So that is that. Where do we leave off here? What do we have? Talk to me. I think we covered everything. Oil was a big one. Energy, like I said, if you're one of us, you have investments with us here at Jazz Wealth. Energy, commodities, tech, they all did really, really well today. Broad market stocks, right? Your broad market exposure, fairly flat, just like the stock market was fairly flat today. And now you know why. So I hope you enjoyed. We will keep it short, cut it off there. We got team softball tonight for Jazz Wealth. Go Jazz, right? You guys think I wear these shirts to stand out. This is because we have softball games. So I got to be on my way. I appreciate you guys watching. I appreciate all of you that are calling and starting to work with us, taking us along for the ride. We have our first series of the class coming out soon. We are going to do retirement investing, long-term investing for you, but along the way, I want to teach you everything about personal finance. And I was going to make this really, really large class. I will over time. What I'm actually going to do is do it in segments. So we are starting to film our budgeting segment coming up soon, and it's not going to be opinions. It's not going to be what I think you should do. It's going to be step for step. What should you do with your money, and when should you do it? You know, when you go around your house and you just sort of automatically pick up after yourself? Well, hopefully. You pick up after yourself. You know where the dishes go. You know where the sheets go. You know where your dirty socks in the living room go when you pick them up. I want you guys to think the same way about that with money. So my goal with this business, help you with your retirement investments. We'll take care of that. That part to me is a no-brainer. I could do it with my eyes closed. But what I really want you guys to do is be able to manage your money the same way you pick up your house. Just automatically, you know this money goes here, this goes here. You don't have to think about it, which means you don't have to stress about it. So our first segment's coming out. I think it's going to be 8 to 10 videos, really short, but very, very, very specific. So keep an eye out for that. Anyways, I will talk to you guys later. Appreciate you guys watching. Leave me a comment if there's anything I need that you need help with, and we'll take it from there. Have a great day.